and welcome to the Go No Go show here on StockCharts TV. My name is Tyler Wood. I'm a CMT charter holder, and today, as always, I am joined by Alex Cole, the creator of GoNoGo Charts. How are you doing today, my friend?
Doing well. We've got some slightly smoky air, but not as bad as last time.
Yeah, our poor friends, neighbors to the north, are dealing with more forest fires.
Yeah.
But why don't we turn our eye to the market that's heating up a little bit here, Alex? Let's start with our cross-asset heat map and just talk about what's happening from a trend perspective across the asset classes.
Well, what's exciting, I think, for most people that are listening to a show like this is that the equities have bounced nicely again this week after that sort of cooling off period, a little bit of a correction. We saw the weaker aqua bars. That's, of course, the top panel. But the last couple of days, a couple of sessions, we've seen a return to the stronger blue gold bars. So that's a good sign for equities. We're seeing some uncertainty with Treasury bond prices and some reversion to a no-go in commodities and some strength in the dollar as well.
Excellent. Well, let's go through our top level drivers from that intermarket perspective, starting with the TNX. Let's take a look at 10-year Treasury yields. We can start with this on a daily basis. But as we've noted in the show over the last several weeks, we've got a lot of stability in some of these drivers, right?
Yeah.
Go and no-go oscillation in terms of the trend identification on the daily basis. But from a larger perspective, we've been fairly range-bound and not seeing any sharp moves in Treasury yields certainly keeps markets stable, and that lack of uncertainty is probably helpful to our risk assets. From a trend perspective, Alex, looks like we haven't even gotten back to that downward sloping trend line.
Yeah, and you can see the prior high here that we're still far away from. But, you know, that comment, whether or not we're in a rising rate environment versus an elevated rate environment, again, that's how we have to look at it. You know, we were in a period of very fast rising rates for a year or so, and now we seem to have stabilized, as you said. And we're in a go trend, but we aren't racing off to new highs at the moment.
Context matters. When in doubt, zoom out, right?
Yeah.
Let's turn our eye to the chart of UUP. That's a dollar index ETF, which is going to give us some volume data as well. And why don't we zoom that out to a week? Yeah, we can zoom it out this way, or even jump to a weekly basis.
Yeah.
Just see where we're at.
The weekly chart's been very interesting because we've been talking about how we saw the dollar fail at this prior level that was resistance. It was resistance back here, then it became support. So that concept of polarity that's, of course, so important. Now, we've been watching this chart for a long time, for a couple of months, as we saw this max drawn-out go-no-go squeeze as price moved mostly sideways in this no-go correction. And then, of course, we broke out of the squeeze into positive territory, which we noted was a concern for the no-go, but it managed to stay in no-go bars until, of course, now the oscillator finding support, quickly retesting the zero line as the first go colored bar showing up on the weekly chart. Now, of course, it's a Thursday, so we don't know where we're going to close tomorrow, but if price closes where it is here, we'll be looking at the first go bar for the dollar in quite some time.
Absolutely. And let's jump back down to that daily basis to take a little closer look at this week's price action. Certainly some stronger up moves, but still not yet above that prior resistance level.
Right. We've got these overhead supply levels here. We know that that's going to be tough for price to get above, but that's what we're going to be looking at. And we'll also want to see, Tyler, the oscillator getting back above the zero line. If it's going to support price moving any higher, we'll need to see momentum on the side of the go trend.
Absolutely. Let's check in on gold real quick, Alex, and see how our precious metals are looking in the commodities sector.
Yeah, gold's been sort of falling away slowly, and it continues to do so. We're in a no-go trend. We're seeing purple bars. That's the stronger form of our no-go trend. And that, of course, comes after momentum tested the zero line several times here, and that gave us these trend continuation icons. Of course, trend continuation within a no-go trend. So every time the oscillator tested that zero line and failed, we knew that momentum was resurgent in the direction of the no-go to the downside. And so we've seen price fall away since then. And of course, most recently, it's broken below quite a significant level that could have acted as support. So that was interesting to note as well.
Absolutely. And now let's turn over to U.S. oil and just see what the energy markets are showing us this week.
Well, do you want to take this or do you want me to take this? There's nothing really to say. I'm running out of ways to describe this chart.
I feel like Bill Murray here in a Groundhog's Day from a technical analyst. The story remains unchanged, drifting lower here.
Drifting lower, not a lot of momentum. The oscillator struggling to get away from the zero line in any direction. You can see right now we're in a max go-no-go squeeze. But yeah, really in the middle of this downward sloping trend channel, not a lot to report here. We haven't made a new lower low, but price just drifts in this no-go trend.
You know, I think for a lot of new traders, they forget that markets can move in three directions, right? Up, down, or sideways. And I think the context of this sort of global macro, right, taking a top-down perspective and looking across the asset classes first, helps us understand that there's relative stability in these securities or asset classes that had been highly volatile through the post-COVID regime, where we saw markets ripping to new highs in 2020 and 2021. We also saw commodities markets really explosive, as well as some high volatility in the US dollar and in Treasury rates. So when we're seeing this kind of range bound, it's choppy on the daily charts, but firmly embedded within that trend channel, that's giving relative stability across the intermarket approaches. So if we turn our eye now to the equity markets, we can take a look at the S&P 500 just for the benchmark index perspective. That's going to show us that relative stability in these other asset classes can remove some of the uncertainty, at least for institutional investors, to feel more confident and comfortable deploying capital to risk assets like the equity space. So let's, on a weekly basis, right, we're breaking to new relative highs, and we've secured that position above those prior resistance levels.
Yeah, just because we were in that weekly chart, I thought we'd start here, but this is such a nice sort of smooth, relatively stress-free move higher, a string of strong blue go bars, oscillator finding support and then moving further into positive territory. Like you said, new highs. There is another one we're going to get past here before we test the ultimate high, but we're just sort of nicely moving higher and in a not a particularly volatile way. And like you said, that could be due to the stability that we see around the other asset classes. If we drop this down to the daily chart, you can see how nice and sort of strong that move has been most recently, but that we are at an inflection point. We've tested that zero line on the oscillator. You can see that the go-no-go trend painted some weaker aqua bars as it came off from its prior high following this counter trend correction icon, but now has rallied this week. So we're seeing strong blue go bars again, oscillator at zero. We'll want to see the oscillator bounce back into positive territory to be able to have some confidence that we'll mount an attack on this prior high.
Absolutely. And for those of you who are new to GoNoGo Charts, what we're looking at in that top panel is a trend model, right? So we're taking the weight of the evidence, multiple indicators, computing all of that in the back end to reduce any analysis paralysis, any clutter on our charts. But the weight of the evidence is showing us a strong go trend as we recover from that counter trend correction. And it's not uncommon for the market to need to digest quick gains. They say we take the stairs on the way up, so that buying into weakness certainly seems to be the predominant mindset for a lot of investors, despite what continues to be fairly negative sentiment and a lot of the global macro crowd still seeing from their own set of tools risk on the horizon for recession and who knows what else they're looking at. But the message of the market is clear. We are strengthening off of this recent pullback, and we'll be looking to that zero line to see which direction the oscillator will resolve, right? In that tug of war between buyers and sellers, we want to see positive momentum resurge in the direction of the underlying trend if this is to continue.
Yep.
So Alex, it's not a stock market, but rather a market of stocks. And we've had some really interesting rotation taking place this week. As you mentioned, it's midday on Thursday, June 29th. But we're certainly seeing some new faces appear in the leadership groups as our growth equity sectors, technology, communications, and consumer discretionary, weaken in their relative outperformance to this rising S&P 500. And we're seeing some new leadership emerge in the industrials sector, the XLI ETF representing the industrial sector of the S&P 500, which, as we recall from our 2022 bear market days, the cyclical sectors of the economy were our leadership groups. And we've certainly seen in historical track record that the leadership groups during the prior bear market tend to resurge as new leadership in the next phase of the bull market. So we've had strong momentum off those ultimate lows for the growth equity sectors. They had the most to gain as they had lost the most in 2022. But here we're seeing industrials start to outperform. So let's dive into the XLI. Let's look at it first just on a relative basis to the SPY. Let's just do a ratio chart of just that sector group on a relative basis. So here we're seeing very early days on a daily chart of relative outperformance in a go trend of the industrials group relative to the benchmark index. And what we were looking at on that heat map was simply all of the sector groups relative to the benchmark. So ratio charts just like this. We want to see the whole market in a quick heat map fashion. Alex, from a trend perspective, breaking to positive momentum in that GoNoGo oscillator, retesting the zero line 3 times.
Yeah.
Now in a strong go trend condition for the XLI. Anything else that you'd want to pull off of this chart?
No, I mean, this is just, we really do want to get people comfortable reading the charts in a way that will get the most use out of the go-no-go concepts. And this is a nice one to show that once the no-go trend was identified here in this relative ratio of industrials to the S&P, this zero line acted as resistance throughout that move, as it should, right? If the trend is down, then you are going to see negative momentum in a normal, healthy downtrend. So the first time that didn't hold as resistance, that's going to perk our attention up to the possibility of some sort of reversal. And then you can see as the oscillator found support now at the zero line and keeps moving into positive territory, that counts as more of a threat to the no-go trend, because if a trend is healthy to the downside, we shouldn't be seeing any excessive or enthusiasm on the buying side. Mm-hmm. Then, of course, that leads to the go-no-go trend indicator painting some uncertainty with the amber bars. And then finally, on the last retest of zero and the bounce back into positive territory, we see that trend change. So now we've had that complete cycle of reversal from a strong trend with strong momentum to waning momentum to counter trend momentum to uncertainty into then a trend in the other direction. So strong go bars now with positive momentum could be the early signs of a larger move higher.
And time frame really matters. Here we're looking at a daily chart. And I think for a lot of new traders, they assume that markets move so fast these days. They've got to be paying attention to their screen every single day so they don't miss these moves. What we're looking at is a formation that took all of the month of June, right, to reverse that downward trend, no-go in industrials on a relative basis to the S&P 500. So we do want to point out that markets move quickly, but there is a process, a bottoming process, a topping process, and we have multiple indicators at our disposal to help us identify those trend reversals. So Alex, let's take our next step. What we like to do, we look at all of the sectors on a relative basis to the benchmark. Let's look at the industry subgroups within the industrial sector relative to this XLI sector ETF. And what this is going to toss out to us is that not even all of the industry groups within the industrial sector are outperforming. We can see that there are certain areas that are extremely strong. And in particular, I want to call out the airlines, the DJUSAR, heavy construction, DJUSHV, and building materials, DJUSBD. And obviously, there are multiple areas, industry subgroups within the industrial sector where we're starting to see relative outperformance to that sector group that is outperforming the benchmark index. But I think we can just take out a few examples from the airlines, heavy construction, and building materials sector. Just take a look at some individual securities that are outperforming. So let's pull up NCRA, Nocera, which is a construction name. Yeah, sorry, Alex, I'm making you jump around a lot on these charts today.
No problem.
Where we obviously on this daily basis went through a similar process of bottoming, some counter trend momentum breaking to the upside before this trend actually got itself established and then broke out to these new highs. I want to draw a little bit of attention to the GoNoGo squeeze, because we were looking at a squeeze in the context of trend reversal. We can also see GoNoGo squeeze form during a trend continuation pattern. So here we saw the trend reversal, we saw positive momentum on heavy volume, and then a retest of the zero line where indeed markets needed to digest those recent gains. We had range-bound price action and a real tug of war between buyers and sellers. That would be a very drawn-out 2-week max squeeze had we not seen that brief blip into positive momentum. But where it is finally broken decisively to the upside on heavy volume. So remember, the GoNoGo oscillator changes to a dark blue color when we've got heavy relative volume, and that's where we're seeing significant price increases on this chart of Nocera.
And that's also where we broke above this glaringly obvious horizontal resistance, right? So exactly. This strong bar here, as we move off the zero line on heavy volume, coincides with some simple traditional price analysis breaking above this level of horizontal resistance. So, right here, the market has shifted in its understanding of what is value, what's good value for this stock. And so right here, you can still catch these last 3 or 4 bars of movement.
Absolutely. And from a trend following perspective, where we see momentum resurging in the direction of the trend, right? We can lean into our short positions if you trade to the short side, or to our long positions, pyramiding into that and growing our position size. Even if at first we're just dipping a toe in the water of the industrial sector that has been an underperformer through most of the first half of this year. Alex, let's take a look at another one. Skywest, SKYW is the ticker. And if you've been flying airlines recently, they must be making a hefty profit given the price of tickets. It's been shocking to me and my family. This is the daily basis. Let's also bounce this out to a weekly chart so we can get a little more context to this recent move.
Yeah, absolutely. I mean, look, this is the same process, right? We tried to, I guess, one of the goals of GoNoGo Charts was to give people an ability to read charts in a way that consistently made sense time after time after time. And if you can do that, then you can help establish a process within which to make decisions and do it consistently. And you've got the same thing happening here. No-go trend in place. Oscillator stays below zero, right? Retesting, getting rejected over and over again, as we are told quite clearly that this no-go trend continues to be strong because momentum is resurgent in the direction of the trend every time we see these red circles. And then finally, that fails to be the case. Oscillator cannot stay below zero, breaks into positive territory, and we see that process that we talked about on the other chart. We see it starting to take place. Positive momentum, retest, and then, of course, a slightly higher low. And then finally, we move into go bars. And now, of course, we're in strong blue go bars on this weekly chart. But I just wanted to just emphasize that the way to read these should be repeatable if you're going to get valuable information out of the charts.
Absolutely. And I know there are a lot of gurus out there teaching people how to trade the way they trade. And I think what really stood out to me from the CMT program and from all of these years that I've been working with technical analysts, it's that you have to develop a process that fits you. Andreas Klenau was talking about the importance of finding a system and a model that fits your own personality. So the time frame, your risk tolerance, the securities markets that you want to be trading, that's all very personal. But having a technical toolkit that would work for any trading strategy, I think is a very helpful place to start, where you have a checklist and a weight of the evidence that doesn't cloud your judgment with analysis paralysis, right? We love all of the technical tools that we've learned over the years, but we don't want so many indicators on our chart that we can't see these important breakouts and trend reversals. So Alex, let's turn our eye to one more. BCC is the ticker symbol. And here we're looking at building materials and fixtures. There we go. Boise, what is that? Cascade Company. There we go.
Boise Cascade Company.
Yeah. And this is on that daily basis, very similar chart to read. The bottoming process, the breakthrough to the upside for momentum on heavy volume, preceding the trend reversal as it retests the zero line before decisively moving higher in terms of price action. And just a classical chart here, Alex. Let's talk a little bit about those trend correction arrows as well, how people might be able to interpret those through the life cycle of their trade.
Yeah, one of the main advantages we believe in using a complete checklist is that you incorporate all of the different components of technical analysis. And one of them is looking at momentum in terms of whether price is moving very, very quickly in one direction or not, and whether or not it should come back, right? That's a very traditional concept and a very traditional understanding of momentum tools. So we talk a lot about the zero line with the GoNoGo oscillator because we believe that adds a bit of value, perhaps where there isn't when you use some other oscillators. But a traditional look at momentum would tell you that when price has moved very quickly in one direction, when you measure the price velocity and it's moved very, very fast, when momentum then cools off, we can expect a little bit of a reversion to the mean. When we're in trend, that often takes place as a counter trend correction, not as a complete trend reversal, of course. So what we want to do with GoNoGo Charts is get that understanding with all the components of technical analysis. So we put these counter trend correction icons, these arrows on the chart when momentum has been overbought or oversold and then comes back into a neutral territory. And then that tells us that in the short term, price may struggle to go higher. And you see then often price rallies quickly, we get a counter trend correction arrow, and it cools off before it goes again. Then you see a counter trend correction arrow, a little bit of sideways movement, and then it moves again. Another one here, sideways movement. Now, of course, we know, having studied momentum, that strong momentum in a trend can mean that we just blow past those overbought levels. And some people even buy on overbought readings, right? So a healthy trend, you can see lots and lots of these overbought readings, even if you do get these counter trend correction icons on the chart. So, but, like you've talked about many times before, perhaps sensible places to take profit. If you've entered this go trend, you see a quick rally and then price may move against the trend for a short term, perhaps you want to take some profit. But that's how you would understand those counter trend correction icons.
Absolutely. So imagine these were monthly bars. If you were trading around the position, right, entering at a trend continuation icon, taking some off the table at a counter trend correction arrow, and then buying back in again when we see the next trend correction. There are lots of different ways to slice the cat. A lot of different portfolio managers work those strategies and trading around positions to help free up capital to capture future rotation. But hopefully today's episode is helping to highlight that it's not just our mega cap growth names that are leading the market. In fact, we're starting to see rotation and breadth expansion into the industrial sector in lots of different industries, lots of different industry groups, which is really bullish for the whole economy and hopefully for your portfolio as well. Alex, just before we conclude today's episode, I want to check in on our old friend Bitcoin. Let's pull up the Crypto Relmap.
Oh, sure.
Just
Yeah.
for a quick view on the top 4 by market cap relative to the S&P 500. And I know there's been a lot of negative sentiment around the cryptocurrency space. Certainly a lot of painful losses off of the all-time highs. But right now we are seeing Bitcoin back into a go trend relative to the S&P 500. So our largest cap cryptocurrency outpacing the gains in traditional U.S. equities, which is interesting to see.
And looking like it's consolidating at these prior highs. So the next move, of course, with Bitcoin could be explosive. It could really take off, or it could, of course, come back a bit. But relative outperformance, like you said, at the moment.
Absolutely. Excellent, Alex. Well, as always, for those of you who are watching this on YouTube, we hope that you also check out the GoNoGo Charts channel. And we're very excited to be bringing a multi-part educational series to all of our StockCharts friends on how you can think about broad concepts in technical analysis and how you can employ GoNoGo Charts in your own trading. So until next time, from Alex and I, we wish you all the best, be safe, and trade them well.